Most renters think that paying rent is money lost. You pay your rent in exchange for the right to live in a place, yet you build no equity and you get no tax deductions whatsoever. But what if I told you there is a way for you to take tax deductions on your rent and keep more money in your pocket? And you can do this by just simply being a renter. No need to buy a house. By the end of this video, you will learn how to take your rent payments and turn them into potential tax deductions or credit that's going to help you put more money in your pocket or get a bigger tax refund from the IRS. Welcome to Novaris, your channel for financial education. In here, we talk about investments in real estate, investments in the stock market, in precious metals, and small businesses. Now, first things first, the strategies that I'm about to share with you are based on my personal experience. Now, I'm not an accountant and I don't intend to be one. The reason why I'm creating this episode is because I want to share what has worked for me, and then you can take this information and have an informed conversation with your accountant and plan out what works out best in your particular situation, okay? Now, there's actually 3 ways on how you can do this: as a W-2 employee, or as a business owner, or a combination of both, right? But since the combination will cover a little bit of both, then we're just going to focus on the first 2. So let's start with the W-2 employee. So assuming that you currently rent a 2-bedroom apartment, right? You live in 1 bedroom and then you decide to sublease the 2nd bedroom. That sublease will allow you to declare that rental income to the IRS and at the same time take the corresponding deductions that belong to that portion of the rental. So if you happen to have a roommate arrangement, you are already doing this. But the only difference here is that now you're taking that portion that your roommate is giving you as an income, and then you're declaring that income. And of course, will be on a subleasing base, meaning that you will be the main contact with the landlord, and then the additional room will be rent out as a sublease, meaning that if something happens to that room, you will be solely liable for it. So those are some considerations you have to keep into account. However, this strategy will allow you to gain 2 things. 1 is to declare additional income on top of your W-2, and 2, you can actually take deductions that are related to that sublease. Let's say the internet, any water bill, if there's any, the electric bill and heater bill, and things like that. Now, the second way to take a tax deduction on your rent is as a business owner. So for this, you will have an actual business entity set up, okay? And then you're going to have to demonstrate that you're using a portion of your home on a continuous basis for work-related activities. Call it admin work, call it to place inventory, etc. So a great example of people who could be taking advantage of this tax deduction are business owners such as, let's say, you run an Amazon FBA business from your home, you are a babysitter, or you are a hairstylist, and people actually come to your house instead of you going to them. Or if you do trading, for example, you're trading stocks from your home office all day long. So those can work. Now, you cannot do this if you are a W-2 employee and you're only using that office space to do work that is dedicated to your actual job. No, you can be a W-2 employee and then you can have your business on the side. When you do both simultaneously, then you can qualify for this. Or if you're not a W-2 employee and you solely have your own business, then you can take a portion of your rent and deduct it from your taxes. Now, how do you go about calculating how much you get to deduct? Well, there's 2 ways. One is through a method called the Simplified option, which allows you to deduct up to 300 square foot of your home or apartment for a maximum of $5 per square footage. The most you can take out of this is $1,500 per month. That's how much you can take as a deduction. The other way is by taking a percentage. And this is called the regular method. So you're going to explore your home and you're going to see how much of that space you're actually using for business reasons. And then you're going to take a percentage out of it and do a conversion, and that will be the amount you get to deduct. So let's say, for example, that your apartment is 800 square feet and you use 200 square feet as your home office. So when you make the conversion into percentages, that means you're using 25% of your home for business purposes. And if your rent is $2,000 a month, 25% of that is $500. $500 will be the amount that you get to deduct from your taxes for home office expenses. Best of luck in your conversation with your accountant and hope you can make the most out of these tax deductions. See you in the next video. Bye-bye.